All right, so I'm here with Nazri, who's a market maker, professional trader, and he works for Ranger Finance, which is a cool dApp that's building on Solana. And we'll cover that more in detail. And we're going to do a few different videos throughout the weeks to basically inform you how to trade, because it's not my skill set, but fortunately, I'm connected to people that are. So, Nazri, how are you? Just a quick little intro, and thanks for jumping on the podcast.
I'm good, man. Appreciate you having me on. But yeah, more than happy to give like a quick introduction on both my journey in crypto as well as a quick rundown on what Ranger is. So I started my journey with one of the OG options protocol on Sol called Psi Options. Not sure if you've heard about them before, but it was a platform where users could deposit assets and we would generate yield for you. We would generate yield for them by selling options on those assets. I think I learned a lot about options while I was there, and I built a pretty strong passion for all things derivatives, which led me to my next role at Levitas, which is like a data analytics platform for derivatives, mainly options, but also perps. We'll be looking a lot at Levitas in a bit, but yeah, they had options data like term structures, volatility, skews, and for perps you have the good stuff like OI and funding rates. And as much as I love like derivatives data, I also have like a strong inclination towards being part of the Sol ecosystem. And when I saw what the chats at Ranger Finance were building, I was like, damn, I want to be part of this. So here I am back in the Sol ecosystem as head of growth at Ranger. I've only been here since January, but it feels great to be back. And it's been going really good. Yeah, so that's a little about me.
Awesome. Well, I mean, options and stuff, kind of certainly something I'm not super familiar with. We could cover that in another video, but I understand, the whole world of derivatives pretty fascinating. Well, take us through the lessons. I'll share your screen and you teach us some stuff. And just remember, anyone watching, which I hope there's quite a few, nothing is financial advice. This is just educational nature. And put in the comments stuff that you liked, stuff that you want to find out more about as well, so we can cater to educating you. Because at the end of the day, you want to be more profitable as a trader for sure.
Yep. But I think before we get into like the whole like the data and market stuff, maybe I'll just give another quick introduction of what like Ranger is. But I think a good way to look at Ranger is that what Jupiter is for spot, Ranger is for perps. Or another one-liner which I really like is like that Ranger is the sky scanner for perps. So essentially, if you place a trade on Ranger, we will route your order to like the venue that has the lowest price, the lowest impact, and more importantly, the lowest fees. All this is possible with our smart order router, which is designed to like optimize trade execution by evaluating available liquidity across multiple platforms. So yeah, that's Range in a nutshell. And I'm going to be sharing a bit more on how you can utilize all kinds of data when it comes to reading the markets. But my overall thoughts on this market, I think we all know that it hasn't been looking good for a while. We've had multiple break of structures towards the downside. But for several reasons, I'm gonna be flat in this market. So for context, I do have like lots of exposure to Sol because I'm mainly LPing in like GLP pools on Meteora, but leverage position wise, as much as I want to be long right now, I'm gonna stay flat for a bit. But I think this is a very good segue into like the data that I look at to form a thesis on the market. And I usually look at BTC data because it's the most liquid asset and other tokens more or less have a really strong correlation with it. But yeah, the first thing I usually look at is this thing called 25 delta skews, and you can find this on Levitas. And what this tells me is how option traders are positioned. So it kind of gives me a short and long term sentiment of the market. And a very simple way of looking at this is that if skew is positive, like you can see here, the numbers are positive or negative. If it's positive, anything more than zero, traders are expecting more downside. And if skew is negative, traders are expecting more upside. And the reason for this, the reason for this is because skew measures the difference between implied volatility between 25 delta call and put options. And for Levitas, the formula for this is put IV minus call IV. So if you think about it, if people are expecting price to move lower, they would either buy puts or sell calls. So this increases the IV of puts and lowers the IV for calls. And conversely, if people are expecting price to move higher, they would either buy calls or sell puts. So this increases the IV of calls and lowers the IV of puts.
What do you mean,
So
sorry, by IV?
IV is implied volatility, which is one of the things we look at when we price an option. So essentially, if people were to buy an option, IV would increase, and if people to sell it, it goes down. Yeah, implied
Okay.
volatility. Yeah. So looking at skew now, we can see that in the short term, which is like the 1 week to 1 month tenors, skew is very positive. Which with 1 week you can see it at like 8 vols, which is how we look at skew, and at 1 month it's at about 4 vols. So short term traders are potentially buying more puts for like protective towards protection towards the downside. Mid to long term, market is relatively still bullish with 6 month skew at -5 vols, and a year out is at like -8 vols. So we pretty much have like a bullish sentiment intact for the longer term. Yep. So that is what I look at when it comes to skew. The next thing that I usually look at, and this, sorry, yeah.
Can I ask, so how often is this like, very, very reliable? Like, is there some way to chart this, put this chart with an overlay of the price of Bitcoin so you can see how often it is quite accurate?
Yeah. So I actually didn't want to get into this now, but since you since you asked, I probably will drop some stuff that I look at when it comes to skew. I usually look at the 1 week skew, and if we overlay the price on this, let me just see if it. Yep.
Maybe we can touch on it and then do a more full video on it in the next
Sounds
several
good.
days. Cool.
Yep, definitely, man. So I think one of the things when it comes to skew, and another way to think about it is that skew is, you can treat it as like a fear and greed index, right? So obviously, when the fear and greed index are like extremes, most of the time, I don't say all the time, but most of the time, it kind of leads to a potential reversal. So if like it's max fear, usually we'd see price move up, and if it's max greed, we'd see like a retracement or price pulling back. So when we look at skew, we can also use it as a fear and greed index. So remember when I said that the more puts people buy, the more skew goes positive. So the same thing we can. Let me just get the price again real quick. Yeah, the thought behind this is that if skew hits an extreme level, and in this case it's positive 10 vols and negative 10 vols, we will probably likely see like a reversal. So you can see where my mouse is at right now. It's the skew was like 12 vols, and price was at like 55 56k before it kind of bottomed out and started moving up. So that's a very like simple example of how I use skew. But then again, these kind of things don't happen all the time, which is why I keep a constant eye on skew levels. In addition to like having a nice sentiment of where the market is.
Cool. All right. So right now we're looking short-term bearish, but looking out 6 months, 12 months, we're still some room. Like in my opinion, the top is not in. In your opinion, would you say the same?
I am inclined to agree with that. Like, for the sake of our backs is one thing, but I think based on the data, we still have room for moving up. And I think there's a lot of external factors. Like I've seen the chart of like M2 liquidity going around on CT a lot, which is like BTC is like lagging behind it. So M2 liquidity is going up to like all-time highs. Maybe not all-time highs, but it's just like moving up nicely, which potentially could mean that BTC's price is gonna, m- go up in the future. That's one thing. Another thing is obviously you have like Soul ETF, which I'm really hopeful for. I know you as well. So,
Yeah.
in my opinion, I'm inclined to say that we are not topped out yet.
Okay. Very cool. Alrighty. What's the next gem you've got for us?
The next one, GEX, otherwise known as gamma exposure. Now, this is actually has been really helpful to me, but I'm just going to give a quick overview of what GEX is. So looking at this, it helps me understand how dealers or market makers are positioned. So real quick, we want to assume that the assumption is that market makers have a goal of being delta neutral, which means that they aim to minimize the impact on their portfolio's value due to like any price changes in like the underlying asset. So an easier way of looking at this is that either way the market goes, the value of their portfolio remains unchanged. And to hedge against like any delta risk, option dealers and market makers have to like dynamically adjust their positions in the underlying asset. I'm not going to get into the whole technical aspect of this, but in a positive gamma environment, I'll identify which are positive and which is negative in a bit. But in a positive gamma environment, uh, dealers will buy into dips and sell into rips. So we will see like a compression of volatility, and this is where you'll find your support and resistance. Let me say that again. So in a positive gamma environment, dealers will buy into dips, which means that as price goes down, they will buy and they will sell into rips. So as price goes up, they will sell into it. Conversely, in a negative gamma environment, dealers will sell into dips and buy into rips. So we'll see like an expansion of volatility, and this is where you'll see strong and violent breakouts either way. Yeah. So for example, here in Levitas, you can see that a negative gamma environment is at 80K right here because yeah, it's there's more negative gamma than positive gamma here. Which means that if we ever get to like 80K and lose it, there's a possibility that we see Goblin Town, and hopefully that doesn't happen. And another example is if we do get to 85K, which is here, there's a possibility we break out towards the upside. A positive gamma environment would be something like this at 90K or 100K, nice whole levels. But essentially, what this means is that if price were to ever like get to 90K or 100K, we would probably see like some form of resistance as market makers sell as price goes up. So this is what I look at.
So right now, price is 82,800 and something.
Yeah, 82. Let's say 83K.
Okay. So can you just give us exactly what this chart is showing us?
Yep. So at 83K right now, we are very much in negative territory, which means that actually within this whole range of 80K to 85K, we are in a negative territory, which means that either way price goes, it's probably going to be amplified. I'm going to say that I don't know where price is going. Nobody does, but in the this kind of just gives me a like it gives me an idea of how I can prepare for like potential scenarios wherever the market goes.
Okay. So a positive means that they buy the dip and then they sell into the rip, right?
Yep, that's right.
And then the negative means
The opposite.
so they
sell into
negative-
dips,
they sell into dips and then they buy the rips.
buy into rips, yeah, which is where you see like a volatility expansion and price just violently moving one way or the other.
Gotcha. So they'll be selling as it dips. And
Yes.
right now it's showing that there's more selling as it dips kind of pressure based on
Yep,
those
that's right.
lines.
Basically, this whole area we are at, either way price moves, we'll probably see like more amplified moves because there's no they are either selling into the dips or buying into the rips.
So this data is basically showing that it's not going to be like a sideways movement. It's going to be like 83 to 85 to 90 back to 83, something like that.
Yeah, basically chop season.
Okay.
Yeah. I think a very good example of and maybe because right now it's not the right dynamic for or environment for the market, but I think a very good way that I've utilized gamma exposure was that before we even hit 100K, gamma levels at 100K was very positive, and people were saying, and there was a lot of people on CT who were saying like we'd probably see like a breakout 105, 110, whatever it is. But based on just gamma exposure being very positive at 100K, you kind of know that it's probably not going to break out. We'll likely see a very strong resistance at it. Yeah, so that's one of the examples which I've used before, like prior to hitting 100K for the first time.
Gotcha. And if we break that 80K, where they would sell into the dip,
Mhm.
does that line suggest there's a lot of like kind of support at that level as well? And that, you said if that doesn't hold, then we can, go straight down to like 72, and then we kind of hit 6, like,
Yeah, it's it doesn't look really good if we break 80K towards the downside because it's more or less negative gamma. But the thing about this is that I try my best not to rely on this too much because market makers are obviously delta hedging dynamically, so it changes all the time. I don't think Levitas has like real time info, but this just gives me a very good idea of where are the levels I should be looking at and paying more attention to.
cool.
Yeah.
Okay. Any other tips for today?
I do actually. I actually have two more things that I look at. And this is gonna be the liquidation levels and open interest. And for this, we will be using ranges on-chain data. Let me just go to this real quick. Yep. So on-chain data is I to be fair, I look at both on-chain and off-chain, but I'm a bit biased right now and try my best to look at on-chain ranger especially. I think on-chain data gives me an idea of how traders on Sol dexes are positioned. So from this liquidation map, we can see that on-chain traders on-chain traders are mostly long Sol. We are looking at Sol right now. And what I usually look out for are liquidation clusters. And we can see that the most immediate cluster is around this area, which is like, no, my bad. Yeah, right here we can see like a mini cluster of like at 123, and the next one is around this area which is like 120. And I think the general belief is that the market usually hunts for liquidity, and if you were in a short position you could probably use like this 123 level as a take profit, or if you wanted to go long you could potentially find an entry at these clusters in anticipation of reversal. Yeah, so this is just a simple way of looking at like liquidation levels on chain.
And there isn't really anyone currently shorting by the looks of things.
Degens on Sol are always long, so yeah. By the looks of it, there's not much short positions. Yeah, yeah. So this is our Sol liquidation map. The other thing which I really like to look at is open interest. Now, open interest is super interesting because like this helps me understand like the sustainability of any move, right? I think a good example would be this area right here, where when Sol was moving up, but we can see that as Sol moved up, the OI was declining, and this usually means that the current trend may lack the momentum to continue. So unfortunately, it's not telling me much now, because like OI is flat and price is flat, but it's still something I try to look at once in a while. But I think this is a very good example of like understanding OI, the example that I just gave. Yeah.
So when prices like really above and open eye, so open positions, when they start to fall, that's potentially a time to start to take some profits because there's not a whole lot of money in there.
Yeah.
What if you go back to previously when, like in that other period, this period here? So a little bit further, like the December time when it was reversed. Like
This is
what does this
December, right?
show? Yeah, what does that
So
show?
this is price more or less being flat around 240. I would say that it was just chopping. Price was chopping, and so was OI, which kind of. So usually, if you look at it, it makes sense that if price goes up, OI should also go up because people are entering the market, and when OI goes down, if people enter the market, OI should also be going up. So you try to look for these divergences, but this is more or less like standard. Both price and OI are flat. Yeah, this doesn't tell me much actually.
Okay. All right. So right now, from the data we have, nothing's really looking overly bullish or bearish.
Yeah.
If you wanted to put on a long, you could potentially long maybe around the 120 mark. Like, Ranger Finance hasn't got open, like they don't have limit order perps yet, correct?
We don't, but it's actually okay. So we're actually pushing out like TPs and SLs pretty soon. So limit orders will probably come next. Yeah.
Cool. Okay. Well, until then, you can use like Deck Screener to give you a ping if it bounces down to 120. Jump on, potentially
Yeah.
put on a long. Otherwise, if you're shorting, you could possibly. I mean, it's not a whole lot of like the risk to reward ratio, which is maybe something we could talk about another time. It isn't very high. Like to short from 129 down to 120, it's not.
Ooh,
It's
I
not.
mean,
It's not really worth it.
we kind of have like a really nice level of we're kind of at like a nice level of support. So uh, I don't know. I want to say that I'm more inclined to be bullish, not biased because of my back. So, but I as much as possible, I think we should see another leg up. But in terms of catching a falling knife, I'm not a big fan of doing that because I'm sure many people have been wrecked doing that. So, but which is why I keep a keen lookout for like data to see like potential turning points and where I could have like optimal entries.
Cool. Awesome. Any other tips to share with us for this lesson?
For this lesson, the tips is this. I do have several tips. If you guys were ever to look at this kind of data, skews, uh, implied volatility, even like perps data, and if you guys need help, feel free to drop me a DM. More than happy to show you what I've learned because like I'm more than happy to speak to people about this as well. Like I'm a big fan of like data when it comes to derivatives, so always looking forward to speaking to new people.
Well, if you get too many DMs, we'll just do every tip you have in more detail, and then they can DM you, and you can just say, "Watch this, watch this, watch this."
If I ever get too many DMs, I'll probably charge like 1 Sol for a for a DM. No, I'm kidding. It's gonna be free, guys. But yeah, I'll try my best to. I've had several people reach out to me. I've had one-on-ones with people who wanted to learn more. So and the reason I do this is because like as much as possible, if I speak to you about it, I'm learning as well. So it's a plus plus win-win for everyone.
Awesome. All right. Well, thank you very much for that. We'll end it here. Put all the links below where they can contact you. Will be below, and let us know in the comments what you liked and what more stuff you want to learn about. And we'll do another lesson very, very soon. Hopefully, a few lessons will come out of this, and then we can really show, hopefully, how to be a profitable trader using Ranger Finance. Sound good?
Fingers crossed. Thanks, man. I appreciate you having me on today.
My pleasure. Cheers. Anyway, that's all. Thanks for watching. Subscribe up here. Check out these 2 other videos over here. Catch you in the next one.